back to another video. So this video is going to be me just explaining a little bit of psychology and a little bit of backtesting too. So you get to have the best of both worlds here. Let's start off with explaining a few things. What I like to do as a routine. Excuse me. Long day in the gym. I spent like 3 hours, 3.5 hours. But first thing I like to do is to look at the daily, see where it is and what candlestick it is, bullish or bearish, and possibly some fair value gaps in between too, or some volume imbalances. Just put that there for safekeeping. Where is it? There it is. It's been a minute since I cleaned this up. So let's go here and start off fresh. So we go to the daily, then I go on the 15 and see what higher time frame would look like, and we'll probably have to go to the next day on this one. Next New York session. It does take a second. There we go. Okay. So let's see here. This is the 26th. And I'll probably have to go back. Monday, 7 a.m. Let's get rid of this. It's kind of okay. Here's Monday, so that stays. So if that's Monday, what day is this? 24th. Yeah, that's wrong. So this is the 24th. Going off of a great start here, but hang in there. We'll get there. 24th, 25th. We are looking at here. Here we go. In this area right here. And I'll go to the 15 to find where we're looking at structure. Then I go into the 1 minute to find our opening gaps for the day. Which is these guys right here. I'll put that there. And right there and right here. So this is Tuesday, 22nd. So this is the 22nd, and I'm gonna keep that. So where the fuck is the 23rd? Yo, this is so 21st is 22nd right there. That's Monday. Yo. No, this is the 20. Oh, this is the 24th. Is that right? 23rd 23rd, 24th. So this should be the 25th. Okay. We're starting off slow, but this is what we do. So now we got it right. So 25th, go to the daily, look at what we're working with today. We see that price is climbing up to maybe test this daily sell side fair value gap, or it might want to reject it, fail, and hit this liquidity to further downside the market some more. So have to wait and see and find out. So I'm gonna go to my 15 and I'll delete all these actually. I don't need all these. Been back testing a lot lately. I'll keep those. So what I do, I'm wait for our, ideally when it's like live, I would wait for 7 a.m. if you're waking up around that time, and just put a little line there and a line for 9:30. And within this space, I usually just wait it out and see where price is making liquidity, and I just let it give me the information I need. So if it's gonna be, where is that? There it is. So if we're doing that, and we'll say, for example, price had buy side liquidity right there, and I'll change the color 1 second. We had price doing buy side liquidity right there, and it swept through and kept going higher, then I would constantly keep placing buy side until it keeps getting crossed, until it isn't getting crossed over anymore. But when I mean by cross, I mean swept. So every time that it does keep getting swept, I'm waiting for it to not get swept in a certain area, so I know where price potentially could come back to. Because between 7 a.m. and 9:30, market open Eastern Standard Time, 9:30, is actually that time for displacement. Displacement meaning like all this right here is just the opposite of what we want. If we want to sell, it doesn't even have it on here. If we want to sell, then we need to see price to market open and not beforehand, because displacement is the opposite of what we're looking for. So don't get me wrong, you can trade displacement, but I don't want to get into in depth with it, so just bear with me on that one. Maybe in another video, but for sure. Alright, cool. So all this is displacement. If it's rising up and displacement is the opposite move, then 9:30 and 10 o'clock should help us figure out whether or not price is actually gonna keep going in that direction or actually go in the opposite of what 7 o'clock through 9:30 is doing. So we're just gonna play it out. Price is at 9:30 and see what happened for the first few candles. So right off rip, the first 4 candles went instantly down and went straight to the new week opening gap right here and avoided that buy side liquidity that's above. So we have, let's see here, we also have our first presented fair value gap of the day. So this is gonna definitely help us. So we have two options. We could, let me add my text on here. We could potentially see, I wonder, yeah, never mind. We could see if price is bearish, I want to see a fair value gap rejection or sell side liquidity purge. So that's just me giving a hypothesis. I'm not saying it's going to happen, but if it's truly bearish, meaning truly going to sell off, I want to see it reject the first fair value gap, or I want to see it purge right through sell side liquidity. And in some cases we can take whatever is available to us if we instantly see this right off rip. Like ideally, some people would say, okay, we got our first day, it would enter here and stop loss above, or appropriately wherever they want, trying to target liquidity or fair value gap or anything like that, but that's going too far. So we're just going to sit here and watch it and see what happens. So you see that price is still sticking to the new week opening gap, but it's still dropping lower. So this could be a indication that it's going to go further down, and once it do, I'm not too sure how far down it's going to be, because the next gaps or black holes are way down here. That's not relatively close. That will probably take a minute. So let's play it out. So it did hit. So in that scenario, if some people seen it, stop loss above, ideally you would still need to let price do its own thing, but I also would like to see like evidence that price is going down. So the evidence right here is how close the new week opening gap acts as a magnet. So price immediately from these three long bearish candles, price automatically magneted to it. It tried to come back up to the first percent fair value gap, but it's literally right next to a black hole. It's meaning price is going to come to it, go through it, and we'll just have to wait and see what else it's going to do before and after 10 a.m. 10 a.m. is usually a reversal or an amplifier. From what I experienced, it's a reversal. So let's just see what happens. Let's get that over. So price is coming back to the new week. Let's see if it's going to come back up to the first fair value gap and reject, or go right through. So it's going right through. Mind you, this magnet is still there. We can look at the 15 and see market structure. So right now we have a higher high, higher low, higher high, higher low, higher high, and then we made a higher low right here, but now we need to see it actually break through to make it a breaker structure. If it's not going to break a structure, then I can bet that it's probably going to be a change of character to the downside. But let's just see what happens. Could sweep this buy side, and if it doesn't, then clearly rejections. Okay, it touched and looked like it's sweeping, going right back to the magnet. So in this case, when you see price sweeping a certain liquidity and you're very certain that it's going to go to the opposite side of the liquidity, I'm just going to get rid of this because it constantly updates my liquidities as price moves. So if you know that this area right here was swept and you have this magnet down here too, well, black hole, and also the first presented fair value gap, you can say this is another magnet, second magnet, and then it's the end goal. Honestly, this type of day would be just like take what you get and not really expect too much out of the day. Kind of would be grateful for that type of day, but So it would be like this. If there is a fair value gap, price would most likely come back up to it, either reject it or not. Oh, this is an inverse actually, so inverse fair value gap. So right here, we have our entry right there. Price made an attempt to come back up, but it failed and it went lower. And we're trusting the fact that the first day fair value gap and the new week opening gap are going to work together to push price further down. As long as price is directly going to keep following this this market structure on the higher time frame, meaning if we don't make a break of structure, then most likely we're going to make a change of character. So it would be like right here is what we're looking to target, or this liquidity. So let's go to the 1 minute. I personally would target this after I see confirmation of a rejection. So there you go. Just off by an inch, but most likely it's going to come back down. Just give it time. Right there. So as you can see, price swept buy side liquidity, meaning there was a available fair value gap, which is a chance for us to get in from a reversal standpoint. So price came up to these new day opening gaps, didn't go any higher than this high from yesterday, and it rejected, came back down to the first fair value gap presented, and the new week came back up for another potential entry, which is basically like pyramiding meaning stacking the position that you're already in, and it delivered all the way down to our target right there. So technically speaking, that's technically two spots you can get in and safely secure an exit out of this trade. And this would have been one of those days. It's not really looking for a banger. It's just looking for you see this, you took it, and you just monitor it and just trust with time that price is going to move on its own, do its business. It's eventually going to come back and keep seeking out liquidity areas that are more smoother. Like this area is smooth, this area is kind of a little jagged, but it did create a smoother area afterwards. So that's a pretty good example, not gonna lie. So after that, you just walk away for the day. So let's go into another example here. I'll just leave it. Let's go to the next New York session. I swear these things take forever. Alright, so what time is it? So we have our 9:30, or is 7 a.m. And our 10 a.m. So since I'm already on the 1 minute chart, I'm just gonna look for our new day's opening gaps. Let's just zoom back a little bit. Here it is right there. Yeah, that's good. So this is going to be January 26th. And this guy is going to be our low. No, our high. I'm tripping. $26. So Got that right there. And now we go to our daily and we check out what we're looking at here. Let's delete that, and I'll delete these from yesterday. So today we're looking like we're not really making any progress to sell back down, but currently I do see a volume imbalance right here. This volume imbalance is a gap in between two daily candles, which shows that there's potential chance for price to come back down and most likely reject it, or it acts like a giant wall for price to never come back to and amplify away from it. Where is the volume imbalance? There it is. So going on to the 15, let's look at the structure here. So from here to here, we see that price is moving up, made a lower low, now it's making a higher high from this point. We can obviously see from way back here, but we're only gonna focus on 7 a.m. all the way to 9:30. We need to look at that data so it can help us. But right off rip, I see this guy. What this fair value gap right here. And it is a buy side fair value gap. So we see the new week opening gap above. We have the volume imbalance. I feel like we need more data and just wait it out a little bit. So again, I'm just gonna mark out our liquidities. So buy side obviously has been tagged multiple times here, 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 and here. So the last place it didn't get swept out or touched was like right here, right there. So this is buy side, and sell side stayed in the clear right here. Sell side stayed clear down there. So in most situations that I have experience with volume imbalances and the new week opening gap being that close, is if there's news and it's negative news, most likely price will break through the volume imbalance. But if it's news that's pretty positive, like I don't know, like somebody speaking or just a red folder news that's pretty much good for the market, most likely it's going to head towards like the new week opening gap. Couldn't even say the name. Head towards the new week opening gap, and if the volume imbalance is above and it's good news, then we honestly have to wait and see if price is strong enough to break through it. It has to go through the consequent encroachment of the volume imbalance on the daily time frame. Just check it out. We can obviously see it on the 1 minute too, but it's also very dangerous. It's almost like a slingshot or a bow and arrow. Like you have to pull back the string to shoot the bow, or you have to pull the rubber band back to shoot the rock, and that's most of the case that how it looks. But since we're at 9:30 and we see that displacement, it was going up, I want to see if price is going to stay true to a certain side of liquidity. So I'm not being biased to nothing. I'm just going to take it as it is. So right off rip, I see that buy side was swept, and this is our current buy side liquidity right here. And I see that we have our first day presented right here. So my thing is, if displacement was going up, I want to see if price is strong enough to sweep sell side liquidity. If it is strong enough and it just exactly how I said it, the analogy wise, like a slingshot and bow and arrow, I want to see price shoot up, because I want to see it. if the volume imbalance is super strong in this certain area and price is going to test it, I want to see it fail. I honestly do. And when it does, I'm taking a buy, and it's headed straight towards the black hole. The black hole, which is right here, this new week opening gap right here. So that's what I'm looking at. So I'm going to put a little mental note here. If price is selling off, then I want to see it come down to the daily imbalance. And I put seal instead of sell. So let's see if it's going to come down. And it does not. So in this case, honestly, if it's going to stay close to the new week opening gap, I want to see if it would come up in this area, and I would look for a sell. And I would honestly wait pretty much. I would just wait the whole time. So let's just check it out. And it's going to go right to it. It's really fighting. Look at that. So I'm going to get rid of this. I'm going to just let it do its thing. I'm going to check the 5 minute. So the 5 minute looks like we have a lower low. Now it's creating a higher high. 15 minute is still making a higher high. So we want to see what area around here is where price is going to bend the knee and actually give us breathing room to retrace back down. So 10 a.m. is already happening. See what happens. Let's see what happens. Nothing yet. Nothing yet. Drag this over. There it is. So now we have buy side liquidity over here. And we also have a opportunity to get in if it's really selling. So the consequent encroachment of this guy is, I'm just gonna eyeball this like right here. And if it actually passed through, and if it's truly selling, I want to see it come back and fail trying to go back up. So if it fails, like on the second attempt, so the first one is going to be like this. It's going to be like, I'm dropping. Now I need to retrace. This is the part I'm looking at. If it fails to go any higher in that place, then I'm selling. And then it falls. So in that case, it was this guy right here. It was this guy right here, or you can go right here. And then it touch buy side for value gap, and it's going to touch the volume imbalance with the sell side liquidity at the end. We'll just see what happens. I would buy right there. There you go. And now I want to see price magnet all the way back up here. I want to see it come back all the way up to here. I mean, it might take a while, or it might be one of those days you just take partial, but let me just play it and see what happens. Yeah. So since it's consolidating for like since 11 a.m. to basically 1 whole hour, I would just get out, take partial. So I said I would get in like right here, just drag that over. I would just take partials, I'm not gonna lie. Or if I was really just happy with whatever, I would have took it right here, took my partial right there, or waited for the second time for the retracement to come through. I took it right there, right here, right there. So it's almost one of those days. It's actually one of those days where you just, you take what you can get, and you just move away from the table and walk away. So that's just me backtesting, and I'll have to get into another psychology video. This was actually pretty good backtesting. But other than that, like, share, subscribe, and I'll see you guys in the next video.